Hi everyone, let's look at my 4 macro bearish scenarios in this video. The first one is that this is a 1, 2, 3, 4, 5 wave structure, followed by an impulsive A, 3 wave B, and then another impulse to the downside in a wave C. I have 2 bigger issues with this count. The first one is that this wave 4 is very short compared to this wave 2 in the time it took to form. Usually a wave 4 is a lot longer in time compared to wave 2, but in this scenario wave 4 is very short, which therefore is a lot more rare. If we then look at this corrective structure in an ABC, the main problem is this wave 3 over here. Wave 3 has a minimum target of the 1.618 sitting at 14.6k, but as you can see, it did not hit the 1.618 target. Instead, it turned around for a little bounce at the 1 and the 1.236 trend-based fib extension from the all-time high to the low of 1 to the high of wave 2. So therefore, it is more likely this is an ABC 3-wave structure instead of this move being part of an impulsive structure. If we then go to the second scenario that I like to show you, the 2 problems I just mentioned are the same. Wave 4 is short, wave 3 did not reach its target, but other than that it's actually very plausible. In this scenario, this 5 wave is part of a wave A, looking for B, and then another impulse to the downside in wave C. Inside of this wave B, we are then looking for a zigzag, which is a 5-3-5 wave move, where the most common targets for a wave B are the golden pocket over here starting at 39k and the 786 at basically 50k, and after reaching this we then wait again for an impulse to the downside in a bigger wave C. The third scenario I like to show you is that this is a 1, 2, 3, 4, 5 for then eventually a lot more upside. So this whole structure is an ABC expanding flat because wave B took the highs of wave A, the origin of wave A. However, there's 3 very big problems that I have with this scenario. The first one is that this wave C is very extended in time. It's 5 to 5.5 times longer than wave A and wave B, while usually A and B are longer than wave C. Why? Because A and B are 3-wave structures. A is a 3, B is a 3, and then wave C is an impulsive structure to the downside, which usually takes a lot less time to form. So forming this long for a wave C is, I want to say, rare, but it's almost like impossible. The second problem I have is that the 1.618 that you see over here is pulled from the low of A to the high of B with the Fibonacci retracement tool, which is, it is like a very rare target for a wave C, but we even closed weekly candles below, and therefore this also invalidates for me a wave C because this move went too deep. The third reason I don't like this scenario is actually one I already mentioned, and that is that this wave 3 did not reach wave 3 targets. This scenario, however, can be true, and I will explain that in the bullish macro video that I will make, because this can be still a 1, 2, 3, 4, 5. So then only this move is a wave 4, and then it's not an impulse, it's actually a WXYXZ structure. So instead of then this being an ABC, this is the high of 3, this is the low of 4, and we would be looking for upside. So basically the result is the same because we are still looking for upside. The invalidation is still this low. It's all the same. It's only that this structure is counted differently. And also it's a much better scenario, a lot more likely scenario. So I will explain that in another video. The final scenario that I like to show you is my preferred bearish scenario out of all the bearish scenarios that I've shown you. In this scenario, we again have a 1, 2, 3, 4, 5. Again, wave 4 is on the short side. But now if we look to the downside, this is a very nice 3-wave structure in a W. So it's an ABC. Then inside the X, we have an ABC expanded flat over here. And then we look for another 3-wave move structure in the Y. Now over here, the minimum target for wave X is usually the 382 fib taken from the all-time high to the low of W, which sits at about 29.6k. We would then be looking for a potential short trade to the downside for a wave Y, with a minimum target for wave Y being 12.6k. More commonly targets are about 7 to 5k, which would be very low, and I think the 0.618 target actually has quite nice confluence with this support resistance area over here that we haven't backtested since the very big bull run in 2020. So this is, out of the macro bearish scenarios, my preferred scenario. I hope this video was helpful or valuable to you. I'd like to thank you for watching and subscribing, and I will see you at my next video. Bye bye.